Move on, and it was a strong show of earnings from Prestige Estates. The margins have improved, the profits have surged over 50%. Irfan Razack, Chairman Managing Director, is here to talk about that and lots more in terms of the vision of the company. Good to have you on board, and a strong set of earnings from you this quarter. What really led to this performance? You've also achieved that 41% new sales value guidance. How have you managed to beat this industry rate?
No, I've been always saying that things on ground have been good, and I believe it's a combination of the product that is offered, location, pricing. So I think our people have really got it right, and that's what's helped us to clock these numbers. And even now, even in this quarter, things are pretty bullish and pretty strong. So we don't see any effect of any downturn which is being talked about in all circles. But I think it's also to do something with, a lot of consolidation is also happening in the industry. And the players who have been delivering, who have built the trust over a period of time, and who consistently have been satisfying their clients, I think those players are the ones that are stand to gain, including people like ourselves. And that, I believe, is a game changer now. And this gives the entire team a lot of confidence that, look, the delivery is key, and that's what we've been focusing on. And last year, we delivered 24 million square feet, 10,000 homes. And this half year, we've completed 11.85 million square feet. So the delivery pipeline is on, while we are also planning a host of new launches with the proper pricing, which is affordable in the segment that we are targeting at. I think it's a combination of all this that is happening in the residential market. Fortunately, apart from residential, we are also in different segments of real estate. We are in office, we are in retail, as in shopping malls, and also hospitality. Now, this complete mixed bag is what is helping the company to grow its portfolio, offer varied and mixed offerings to the clients, and that is also helping us build the brand. So
you're continuing to maintain that things on ground are looking quite strong as of now. So let's delve into that further. I know you spoke a little bit about demand, but the residential business for you, how is that shaped up in the first half? Will you manage to meet your overall guidance or even beat the guidance in the second half with the launch pipeline?
I think we should meet the guidance and maybe marginally increase that. Because they are a good set of approvals which will get done soon, and there will be a lot of launches that will happen. So that will add up to the overall sales. Because today, I believe in real estate, because of the change in the entire accounting systems, what one needs to look at is the operational results. And I think operationally, we've been doing quite well. Financially, of course, in Ind-AS, we've had a spate of derecognition of revenue, and we're recognizing it back as and when we're handing over. So that's a little bit of technicality there. But all in all, we are pretty confident that we'll continue this run rate and maybe exceed it. And moreover, we are now going to be operating in 2 new markets, and that also will give us some additional revenue as we go along.
Okay. Now, rental trends as well for you, Mr. Razack, have been fairly robust. You've seen a strong rental CAGR. How are the trends really shaping up? Tell us a little bit about the run rates. Are they sustaining at higher levels?
Yeah, I mean, that's something that we are pretty happy about. It's just over about a year that the rents are going up northwards. Vacancy levels are near zero. There is demand from various large clients, both to lease and also now even to buy office space in large volumes. So that is also helping us to produce more, and then we don't have that uncertainty or we don't have that insecurity, I would say, of once we are producing or building this much of office space, who will be the occupier. So these are spaces which, as and when you are completing them, we have enough of occupants and occupancy at a higher rate. So the rental rates itself have gone northwards. That's why we are able to get a better return and get on the investment. So that is helping the entire cause. And we are doing a lot of office, both in Bangalore, Hyderabad. Now very soon we'll be moving into Mumbai and doing a lot of office there also. That I believe will add up to the entire portfolio of the company. Yes, in Chennai also we are doing 2 properties in the CBD. Those are under construction, as well as an IT park in Kochi.
Trends really looking strong for you. Now, earlier reports had suggested that you were in talks with Nexus to merge your mall business. In our earlier interaction, you said that there were initial discussions in place. So, finally, what is the update on the status of these talks?
No, see, now there are various discussions we keep having. Now it's not, nothing has fructified into a sort of a deal as such as of now, but we always explore different options, and even this option is still being explored, and I believe it's a good time to consolidate our mall portfolio and ultimately try to encash some of it, and obviously that will give us the strength to build more, and at the same time not increase our debt or reduce our debt. Both ways it works. So both in the mall portfolio as well as in the office portfolio, there's a well laid out plan, well laid out strategy, but until and unless we do sign up something firm and definitive, it will just remain in the air. So I think very soon something really strong crystallizes, something concrete crystallizes, then we can make an announcement. Today it's something that is, okay, you're discussing with 3 or 4 people, and that discussion remains a discussion till it fructifies into a strong binding deal.
Thank you, Mr. Razack, for taking time out, telling us about the on-ground situation, how your overall rental sales have planned out, and your kind of guidance that you're giving for Prestige Estates. It's been a